it's not going to be a bad number for equities, because ultimately that feeds through into GDP and it feeds through into earnings. So when we understand that, we can understand that the fright of the hot number, everybody thinks hot numbers, hot numbers, hot numbers. And what happened initially from the hot number outcome was that we got that knee-jerk sell-off from the hot number. But then everybody's starting to think about it, but that's a good number. That's a reasonably good number. Retail sales isn't pointing specifically at inflation. Of course, it's looking at the amount of sales going through. You might be saying, but demand drives inflation. Of course it does. But obviously that's coming from not necessarily, you can have a lot of inflation without having any demand, right? There's two types of inflation. There's stagflation, and then there's the normal type of inflation that comes from a bit more demand coming in. And when obviously they're looking at that idea, then that's what you're seeing in retail sales numbers. You're seeing that there is inflation, but it's coming from some real money demand, which is this core number coming through and the main headline number. And it is a big number. Of course, it's a big number. So equities have a little think about it. So the knee-jerk reaction was the sell. You can obviously understand that. The knee-jerk reaction was the sell. But as I mentioned before the numbers came out, I don't think that's a bad number. I don't think it's a bad number. So obviously you were seeing that little fresh air bottom edge developing there, and it's giving you a nice opportunity to 41.20s up to 41.40s, nearly $1,000 of upside from it. But we'll see how the American Open has a think about this and sees whether they do believe that this is an okay number to work on the buy side with. The challenge you've got, of course, is that if we keep getting good numbers, that 500 to 550 basis points will start moving 525 to 550. So at the moment, 500 to 550 is a good number to use because it still gives you the chance to downtick, it gives you the chance to uptick. But a little bit more clarity. I mean, I don't like being in the 50 tick bracket, Mike. I don't like that idea of sitting kind of, it's almost a cop-out, just trying to say, you know, I don't really know whether we're going to be 525, 550 or 500, 525, but that's exactly what the Fed dots plots tell us that we can really only work with. We don't really have any other way of coming up with this, because if you look at the dots plots prior to the retail sales here, you can see that the prior dots plot suggested 500 to 525, but following yesterday's CPI numbers, you can see that there was a couple of dots plots that just posted a little bit above the 525 by 4 basis points. Now, 4 basis points is one news release away, right? 4 basis points could be changed inside of one single news release. So, yeah, that type of dots plots up here is not convincing me that we're in the 550 narrative, but that's what's currently priced in, is the 550, isn't it? It's the very low edges of the 550. But it's still pricing in 550 bracket, 525, 550 bracket. So I think at this stage, it would be realistic as a Fed speaker, for example, it'd be realistic for you to say, well, I think 500 to 550 is probably the realistic, easy to recognize bracket narrative. And that's obviously what we can start to recognize there is the 500 to the 550 is now the Fed bracket. It'd be a bold Fed speaker to say 500 to 525. Yeah? It'd be a bold Fed speaker if they wanted to go a little bit lower than that. So, you know, the idea is that, you know, they're just keeping it a little bit wider. And I think we saw one of the Fed speakers yesterday saying 500 to 550 was now their bracket they're using based on data coming out next. So we can obviously look at this and see how this storyline is ultimately evolving by looking, for example, at the August numbers following the retail sales there. And we can look and see, we can actually already start to see as we go August, September, October. Take a look at what's starting to happen. Do you see it? Do you see what's happening, guys? Yes or no? You might say you can't see feck all, but let's have a look. You see what's starting to happen again here? Far right-hand side, you're seeing right there. Just post those retail sales numbers coming into today's data. Obviously, there's a long way to go, and usually we don't really get a good idea about what the market's pricing in until the cash open. But you can see it's actually dropped back below the 525, hasn't it? This one's right on it. So the August is right on it. But everything else has just gone below the 525, suggesting that there is a good chance that equities do have some solid enough upside to work into. So you can see why the buyers are keen. We've got the dots plots getting a little bit softer. That's going to be good for equities. That's going to be bullish for equities. It gives the buyers more confidence to step up. But obviously, we still have to get that over that initial worrisome first glance that the equity traders will take from retail sales numbers and say, my God, another hot number, let's sell equities. We've got to get over that. We've got to get past that at the cash open. And if we do, it could open the door to a reasonably solid enough rotational day today. But we'll see how it plays, guys. We'll see how it plays.